Hi everyone, today we have a very informative interview about the actual investment side of the EB-5 program with President and CEO of AISA Investment Advisers LLC, Peyman Attari. Peyman has a long history in the international finance and investment field, and we go over how he is bringing that knowledge and customer service to help facilitate the EB-5 Immigrant Investor Program. His company is paving the way to create more legitimate ways for EB-5 clients to use this immigration program. During the interview, we discuss his history in the financial markets, the difference between a registered investment advisor and a broker-dealer, and how his firm helps service EB-5 immigrant investors and their immigration attorneys to help alleviate a lot of the typical problems potential EB-5 investors face. Please note that this was a friendly interview and no financial exchange or relationship was created for this podcast. Moreover, this interview does not constitute investment advice or recommendations. Welcome to the Immigration Lawyers Podcast. For more information about the program, please visit www.immigrationlawyerspodcast.com. Please note that this recording is informational only and does not constitute legal advice. Please consult an immigration attorney for specific information related to your case. Also, this recording is copyrighted and written permission is required for rebroadcasting. My name is John Khosravi and I am the host of the Immigration Lawyers Podcast. I also practice immigration law in Los Angeles, California. You can learn more information about me by visiting www.jqqlaw.com. Thank you, Peyman. Thank you for coming. I appreciate it. You're on a schedule. You have an interview or a conference today with the ILW.
I do. It's tomorrow, actually.
Oh, it's tomorrow. Okay. Is it a one-day conference or two-day conference?
It's a one-day conference tomorrow, yeah.
Okay, great. So without further ado, let me know a little bit about yourself first, and then we'll go into the business aspects, the details of the work you do. Why don't you let me know about your name, your personal background very briefly, and how you got started in the investment banking world.
Sure. I actually was, the intention was that I had planned to go into the oil industry. So
interesting.
I have a degree in petroleum geology and I'm an associate of the Royal School of Mines in the UK. And when I graduated, that was not a very good time in the oil business. The oil price was down at $9 a barrel. There was a revolution in Iran. So plans changed somewhat. So I started to look into the financial world. And so, and the intention was to go into research in the world of finance, which I did. And initially was to research oil companies. And then I started looking at mining companies, and so that was really my introduction into the markets because the company that I joined, which was actually an American company, Jessup Lamont International, they specialized in South African gold mining shares. So I joined the company and I started basically following both gold as a commodity as well as the mining shares in South Africa. And I then left and joined Deutsche Bank to continue to do the same thing for Deutsche Bank as with the South African division. And then I got very interested in the political situation in South Africa. So I left Deutsche Bank and set up my own, together with a partner, we set up a boutique investment bank that specialized in South Africa. And at the time, the idea was two things. One is that we wanted to, I guess we saw that the changes were coming in South Africa.
So you're pre-apartheid.
This is yes, during apartheid, before the changes. Yeah. So I started to really to talk to a lot of the various parties who were opposing, obviously, the regime in South Africa, ANC, and the various other parties, the COSATU, which was the labor unions, and the Zulus, etc. And the idea was that I guess what I was thinking that nobody wanted to see in South Africa was another situation like Zimbabwe, where there was all capital pulled out of the country, and the country really started down the slippery path to ruin. And in South Africa, the situation was different in that a lot of people, especially a lot of the activists within the ANC, appreciated that, and the fact that they didn't want to see capital leaving the country either. So the idea was to make sure, for us, was to really have an environment where if the changes, and as the changes came, that foreign investment would continue into the South African markets. They had first world companies as far as the companies and their financial infrastructure was concerned. So really I got embroiled in the kind of the South African markets until Nelson Mandela was released from prison, and we had the elections, etc., etc. So I was quite young at that time, and I thought that that was invincibility, that if something had changed in South Africa, surely I could do it again in the other markets, although I had very, very, not even a mentionable involvement in the changes, but as I said, it just felt that changes could be brought to some of the emerging markets. So I rejoined Deutsche Bank, this time with the new emerging markets division. And the goal of the team was basically to get involved in all these markets that were opening up around the world, starting with Latin America, and with a wave of privatizations and the IPOs and everything that was going on. So it really was quite an exciting time to be involved in seeing these markets open up.
Did the Latin American markets ever really go anywhere, or are they kind of going in circles?
No, they've come a long way from where we started off. So if you can imagine, in those days,
what countries did you focus in Latin America?
Argentina, Brazil, Colombia, Peru, Mexico, obviously. And so, we're talking about privatizations of some of these large companies like Petrobras in Brazil and Telebras, etc. In some instances, we've seen that things go in cycles. Argentina has been in and out of bad situations.
During this period, what was the 80s or the 90s?
This is the 90s.
Okay, because Argentina, last 10 years have been just killing themselves, and in Brazil, Petrobras and stuff now are all these scandals coming up. But there was a period of just straight boom from.
Yes. So we went basically. It started off as these companies being very new to being open and IPO'd. So they were basically government-owned companies, a lot of them, and they went through privatization and share ownership. And throughout this time, we've seen cycles where the emerging markets have gone up, and then something happens, changes, inflation, etc., and we go back in the down cycle. So very much a cyclical pattern for a lot of the emerging markets. So, but nonetheless, we're still quite a distance away from where we started at the beginning, where it was just the time of the privatization. Yeah. So really things have come along, both in terms of the development of these countries, as well as, of course, what's happened in the markets. Not to say that they've now become the bastions of democracy and or kind of ideals of democratic regimes. That will just take time with every country. I think that it's not something that will happen.
Now, were you on the ground, or how would you do your analysis? Would you get a lot of data and just go through it?
Yeah, I mean, we would basically have, we would collect the information from the companies. The investment banking team would be involved as well in terms of analyzing basically what the company did and looking at their financials and trying to put it together. I described that in the early days, the emerging markets were the Wild West. There weren't too many rules. There wasn't a lot of data, certainly not sophisticated financial regulations in a lot of these markets. So, it was challenging to get a lot of the information, but that's predominantly what we did. And of course, after the listing of these, and most of them, of course, were listed in their local markets, and then there were American depository receipts that were issued here in the U.S. for American investors and mostly pension funds and institutions to invest in them. We then continued to cover those countries from a research perspective. So those countries, as well as, of course, the various companies that were brought to market. So with that, it meant we would get their annual results and financials. We would visit, talk to the management, and basically issue research products with recommendations of buy, sell, and hold. Right. So that was basically what we did on the research side.
How long did it take from that work to starting? You're the CEO of AISA Investment Advisers, LLC. How long did the process take for you to start your own firm, and what was that process?
Well, it was several things in between. So I had the investment bank in between my career at Deutsche Bank, and then I went back to Deutsche Bank in London. Actually, after Latin America, we carried on the same thing in Russia and Eastern Europe and the Middle East. So I was involved in all of those markets as well. And frankly, then I left the world of investment banking. So my wife and I were both in that field, in investment banking, working in London. And our first daughter was born, and I was traveling all the time. I was, head of research for emerging markets at Deutsche Bank, which means that I was on the road most of the time. It was fun when it's just, my wife and I and no children, so we could meet in Istanbul or, different cities and spend weekends there. But we kind of thought that we needed to think about our priorities, whether we wanted to continue that or not. And certain changes came about at Deutsche Bank as well, which kind of seemed there for the right time to get out of the industry. So we both left. We moved to Louisville, Kentucky, which is where my wife's from, and decided that we should have a much more quiet life. So I just invested in a portfolio of real estate assets that we were managing, multifamily and commercial real estate, etc. So that was basically what I was doing until I came across EB-5. And
when was this?
This was actually in 2012. And the first time I heard about it is one of my partners in real estate investments that was wondering if EB-5 was suitable for one of the projects that we were looking at. And so that was the first time that I had looked at it. And I became interested in the concept for several reasons. One is that it was interesting because most of the investors seemed to come from the various countries that I was familiar with, mostly emerging markets. Secondly is that kind of became pretty obvious as I started looking into EB-5 in a little bit more detail that there were not many service providers who really provided services for the investors. So it seemed to me that the people who were getting the short end of the stick were the investors, and they're the ones who are taking the majority of the risk. So with that, I actually met some people in Louisville. Actually, one of my partners, Catherine, is an old friend of the family, and she happened to be in EB-5. My wife and Catherine were discussing it one day when I was actually in London, and she was working with a regional center in Louisville, and which I didn't know about. So one thing led to another. We kind of decided that we were going to. And I did actually, for a very brief period of time, join that regional center. But then I decided really that was not what I wanted to do in EB-5. I wanted to, as I said, provide services specifically for the investors. So we then formed the company, and we got a local, very forward-looking investor to also back the company. Who was also involved in EB-5 and had a number of things that he was thinking about EB-5 as well. So with that, I then contacted several other friends who are now involved with the company, again from banking and investment banking period. And we formed the company to really, as I said, to get involved specifically in EB-5 and to provide the services for the EB-5 investors.
So your investment advisory is just EB-5, doesn't do other kind of investments that are not EB-5 related?
Not at the moment. So our focus now is first and foremost to provide advice to EB-5 investors looking for projects.
Okay.
And so as a registered investment advisor, what we have is the fiduciary responsibility to put the client's interest first. That is basically the mandate for a regulated investment advisory firm. That is somewhat different from a broker-dealer. A broker-dealer does not have the fiduciary duty. They have the responsibility of suitability, so their standard of suitability. So a broker-dealer, and I think the one way to describe that, which makes it more evident and obvious to what the difference is, a broker-dealer, if you can imagine, is like an investment shop. So they have the goods that they have in their shop. An investor would come in, they would find out about the investor's background, and they would say, okay, well, here are the products that we have. Here's one that is suitable for you. Please go and read the risk disclosures and the offering material. And then basically, if you like it, we'll sell you the investment. And of course, the broker-dealer earns commissions and being paid by the sponsors. What is not their job and responsibility is to say, well, you know, you're looking at this product, there's another store down the road that offers the same thing at the lower cost. Or that there might be something which is a little bit more suitable for you, but it's offered by the other shop. That is not their job, and frankly, it is not something that brokers should do at all. They bring deals to market, ones that they have done the due diligence on. And again, that's the goods they have in their store. So that is their responsibility, basically, to offer the goods that they have. An investment advisor, however, with the fiduciary responsibility, is the one who's supposed to look at various different products from the different shops and say, I understand what your needs are. And here's two products which satisfy your needs, that's therefore suitable for you. However, product A has a lower fee over the time of the investment, therefore it's to your benefit to invest in that. So that's the fiduciary responsibility of a registered investment advisor, which is completely separate than what the responsibility of a broker-dealer is.
Interesting. I definitely want to go more into that, but I want to back a little bit to learn more about your company. So you're based in Kentucky. How big is your firm, and how does the staffing work? Do you have various representatives that do research, or how does that all work?
We do. I mean, there are 6 of us basically at the moment, so not very big, and our approach is very different. So maybe I could describe as to how what our business model is.
Definitely.
So, and I know that there are other investment advisors in the EB-5 market, but our business model is that we operate like a wealth management company, like an investment management company. So with that, what that means is that we go out and look at as many projects as we possibly can. And we have the discipline of investors. So we have criteria, we have an investment strategy, and we basically look to execute that investment strategy. So we go out and look at as many projects as we possibly can. We have our criteria, and the goal is to take the projects through our research and screening process, and to arrive at the projects that we believe at the end of the day have the right risk profile for EB-5 investors. So, so with that, in terms of the actual strategy, if I could describe, so anyone wanting to invest in any project, this is non-EB-5, you would look at an investment based on the risk of that investment. So if the risk is high, you would anticipate to get a high return on that investment. So if you're looking for venture capital or to find the next Google, you anticipate that the risk is going to be very high. Potentially a lot of the projects you may invest in may actually fail completely, but that maybe at the end you might find that one that is the project that does well, and therefore you would expect a high return to compensate for the risk that you're taking. And conversely, if you don't have that propensity or the appetite for risk, you would go for very low risk investments such as government bonds, and of course the return is very low. In the world of EB-5, things don't work like that, because investment is not based on the return of the investment. And I appreciate that, but what we did was say, let's examine basically what the return of an EB-5 investment should be, or what is the reward from an EB-5 investment. And in the best case scenario, we have one, which is the green card, the permanent residency. That is a non-financial return, but a very important part of an EB-5 performance investment. The second is return of capital. Everybody wants a return of capital. It doesn't matter if they say at the beginning they don't care, but for sure when it comes to the end of it, they're going to want their capital back. And the third element is really a return on that investment, but in EB-5 is insignificant. Mostly 95% of projects basically offer about a 0.5% return. So we know that the outcome, what the outcome or the return is from the EB-5 investment. But EB-5 projects come across the spectrum of risk. Some are very risky on the venture capital end, Others are very low risk. So our approach is that if the reward or the return is the same for all EB-5 investments, then it stands to reason that EB-5 investors should choose the projects with the lowest possible risk. There is no point in taking any additional risk, whether it's for the visa or for investment purposes, than it is necessary. So that is what we believe our investment strategy is. So we go out, we have various criteria as to what the collateral should be, what the ratio of the loan value to the property value should be, or the cost should be, etc. And we look at it from the risk of the immigration matters as well, of course. That's very important. So the jobs numbers, the cushions, how the jobs created, is it expenditure, is it from the revenues, and analyze all of that with the goal of finding the projects with the lowest possible risk. So that's how we approach it. A lot of the projects that we see, for example, there has been no background checks done on the principals involved. That's actually required by U.S. Regulations, financial regulations, although it doesn't seem like anybody's actually doing that. I know that some of the brokers who are getting involved in EB-5 are now providing that. But in a lot of other projects that we looked at, we actually take on that responsibility. We have a third party that does that kind of analysis. All of that is time, energy, and costs that we bear. But we believe that's the right approach. So because of that, we don't think the approach of an investor coming to us and say, hey, here's 3 deals, can you do the analysis for me and see if they're good? We don't think that would be cost effective, because firstly, in order to really do the proper analysis, including background checks, in order to be able to provide that advice, becomes really prohibitive. So that's why we don't follow that model. We do it by finding basically that proverbial golden needle in the haystack, by putting in the work ourselves, so that our clients don't have to do the work.
Now, just to get right down to the meat in there, what is the pay structure on this? Do clients pay? Do the regional centers that get chosen pay?
It's a very good question. Yes, it is. We are paid by the clients. Mm-hmm. So that's whom we represent. We are not affiliated with a regional center. We don't work for a developer. The sponsor doesn't pay us. So the responsibility of taking care of our fees falls on the client. So, and I'm conscious of the fact, of course, that the investors are already feed to the eyeballs. And so we wanted to approach it in a way to not to add to the burden of our clients. So we sat with the regulator, and we suggested a fee structure, and they are happy with it. So basically what we do at the moment, and we are expanding on that, is this, that when we look at the projects and we reach an agreement with the sponsor or the regional center, that because there's no agent involved with our clients coming in, that we negotiate a discount or a reduction of the admin fees. Mm-hmm. We try to negotiate as big a discount as we possibly can, which will be to the benefit of the client. But our fees are set. We are a regulated entity. Our fees are regulated. The regulator looks at it to make sure that they are reasonable for the services that we provide. So our fees will not change. So we negotiate the discount. So it means that our investors, our clients' total out-of-pocket expense ends up being pretty much what they would be whether we were involved or not. The one thing to remember from a regulatory aspect is, however, is that if that discount is less or we cannot get the discount, our clients still owe us those fees. But we obviously do try to negotiate that, and certainly the regional centers don't have a problem in terms of reducing the fees. The problem may arise if the regional centers they don't want to have a different structure for us versus, if you like, some of the agents and or brokers that they might work with. So in that instance, what I'm doing, again, I brought a model from the institutional side, which is what they call it on the institutional side is commission recapture, which is something that big fund management firms have with their broker-dealers, an arrangement where they recapture some of the commissions that they pay. So with that, which we will be introducing, and that would be for us not to negotiate a discount, but to actually tell the regional central sponsor to treat us like another agent, and to pay the fees, whatever there might be, that they pay to brokers, including potentially ongoing or what they call trailing commissions, to us. The difference is that we have set up an investor's account, basically, which is structured very similarly to actual project accounts. NES is the administrator, and it goes into an account, so we can't move funds out of that without the administrator's also written approval. So the fees are paid into that account, but they don't belong to us, they belong to the client. So what happens is that the client pays us, they get a rebate of these fees back into their account, which is theirs. And of course, as I said, what we do hope to get is as much a rebate as possible. The bigger rebate we get is the bigger advantage to the clients. It doesn't come to us. So that's kind of a new structure that we're finalizing and putting it, and we have to, of course, get it through the regulators as well, or more specifically to have it approved as part of our fee structure.
Very good. Now, as an immigration attorney, if I get a call from a foreign potential immigrant investor, what would be the process of connecting them with you? And, do I have a responsibility of how I connect, or not to show to the client that we have a relationship, or how does that all work? How do I do that?
Well, I think that it's a matter of the important issue to remember this, and I think you alluded to that, is that immigration attorneys are not really allowed to provide any investment advice. And that's one of the things that I discuss in my ILW talks, is that there are a number of reasons, other than it, of course, being that it's against the financial regulations, unless the attorney actually has a registration, either as a broker-dealer or investment advisor. But also, with the professional liability, there is actually an exclusion clause for providing investment advice. So it really becomes very tricky and somewhat of a liability for immigration attorneys to provide any investment advice. And also, if we think about risk, just saying go to this regional center, they've had good success in the past, is actually investment advice, and actually not a good one, because these are single asset investments, and just because project number 1 to 10 was successful, it doesn't mean that project 11 is also going to have the same success. So each project needs its own analysis. So really it becomes a matter of saying, I think really referring clients to investment and or financial advisors, or really broker-dealers, to say that if it doesn't necessarily have to be one, it doesn't have to be, or here's Peyman, go and talk to them. Although, we are independent and we do have that fiduciary responsibility. So that introduction would be like introducing to another attorney, if you like, for providing services in perhaps a field that you don't specialize in. But it's really, I think, the best advice for immigration attorneys to give to their clients is to give them a referral to an investment advisor or broker-dealer whose job it is to really bring the deals and introduce them to the right deals.
Wonderful. And then when a client comes to you, how would that work? You get more information about them first, or?
Oh, absolutely. So we go through the steps that we need to in order to onboard that client first. So the first call is to just tell them who we are and what we do. So it's very important for them to understand what our role is in the transaction, and especially for our clients, I want them to know the relationship is between the client and us, that we are not a representative of the deal. I think that is, and for many people, especially from some of the emerging markets, they don't quite understand that, and that needs explanation. So for us, the first is to really explain our function and the relationship that we have. And if they're comfortable with that, obviously we then go to the next step, which is what we call the onboarding. So that includes we have to go through the Know Your Customer process. So they will need to complete the forms for us so that we get some information about their background, their other financial assets, their other investments, how knowledgeable they are with regarding to investments generally, what is their risk appetite, what is their risk tolerance, and these it's a questionnaire that asks quite simple questions. It doesn't say what's your risk appetite. It kind of says, well, if there's an investment like this, which one would you prefer to invest in, etc. To really kind of take them through a process so that it gives us a good idea as to what their general understanding is, what their background is. Then when we have that, obviously we also, just as part of the Know Your Customer and also AML requirements, we need some identification, etc., in order to verify that they are the client. So then they're fully on board, and basically at that time we then go through introducing to the projects. We're making the recommendations to the projects that we are, with the advisory reps to talk through the project. They have access. They get given password access to our website, where we have the research on the projects that we are recommending. And the research, again, is designed to be as simple or as detailed as the client wants it to be. In other words, they go in, and there's certain areas that we've ranked in terms of the 526 approval, the 829 approval, return of capital, and also what we call the implied cost of the green card, which we look at what the market risk would be, how much the market would get if they were investing in the same project, etc. And so they can look at that rating, and of course everything on there meet the minimum requirements, but there might be aspects that are a little bit better than minimum requirements, and we've got a rating for those. If they want to go into more depth, they basically click on it, it expands, and it gives them more information about some of the underlying issues that we've looked at and we've researched. And if they want to go even further than that, again, they click on each one of those aspects, and again, it expands into really the detailed analysis that we have done, the reasons why we've reached our conclusions, and if they're interested, they can read and basically follow all of that logic as well.
Now, at that point, you've provided a lot of services and a lot of time.
Yes.
How would the fee arrangement work? Would they put an amount in retainer to see if that discount program with the regional center works, or are these services all provided with the goal of them saying yes? Because they back out at that point.
Well, that's right. I mean, really, they need to understand that as soon as they've signed our investment advisory agreement and we then provide those services, they owe us the fees. Mm-hmm. So, and our fees are divided into that first part, which is the due diligence, research, and consulting and advisory services. And then there is ongoing fees that we charge because we continue to monitor that project for our clients. So, and of course, they don't have to have our ongoing services, although we recommend that. But in effect, once they have accepted and then we then provide them with the recommendation, they really owe us that fee. So, and the idea is as soon as they fund their account, then we will take our fees. And of course, when they pick the investment, at the moment, the minimum investment plus whatever is owed to the regional center is then transferred from their investment account to the
Now,
regional center.
There's three questions that will come out from an EB-5 investor, and they're kind of when you're sitting on our side, you hear them so much, you could kind of get them annoying. One is they're going to ask you, what would you do? And do you have the ability to say, pick this one, or do they have to be in
we
that
do,
position?
absolutely.
Oh,
No, we have. That's what we are supposed to do. We're actually supposed to recommend an investment.
Oh, okay, perfect. That's the one they want to hear.
So that's very important. Again, so with a broker-dealer, they're really not supposed to recommend, saying invest in this one. They're supposed to say this is a suitable investment for you, and you go make the decision. But we, as their advisor, actually can say we recommend this particular investment for these reasons. Mm-hmm. And so, yes, we can actually recommend that.
And then the second thing that comes from that is they're going to want guarantees. How do you respond to the immigration client that says, can you guarantee this for me? Which is an impossible thing because I can't even guarantee the sun's going to come up tomorrow. But they have that mentality that they want that.
I tell them exactly the same thing. And in fact, they come across that issue when they are reading through our investment advisory agreement, because it's clearly pointed out in that we do not guarantee and cannot guarantee anything. And I know for some this comes across as strange because they say, well, if you've done all the work, how can you not guarantee that this is a good investment? Well, frankly, at the end of the day, if everything was so certain, then we will all have invested in Google, right? So it's never a guarantee, especially when it comes to investments. Of course, we would have done our best to look at all the risk aspects and to reach a decision that, based on our judgment, that the risks are tolerable and they are low and or have been mitigated, but of course there is no guarantee, and so we do try to make that as clear to them as possible, and that usually comes up when they read through our investment advisory agreement.
And from an immigration law perspective, I've had friends and colleagues who've had cases denied because a part of the regional set of paperwork gave some sort of guarantee, or the client went to the interview and their attorney had said, oh, my attorney said it's a guarantee and stuff. And once that guarantee, that G word comes in, that's an immediate denial in I-526 or consular processing. There's no guarantees, and any inclination towards that could lead to denial of the case.
Absolutely.
And the follow-up to the guarantee that comes up is, when do I get my money back? And for immigration purposes, we can't give a specific date because that would seem like a guarantee of some sort.
Yes.
How do you broach that subject? Is there a range you give, or?
Well, I think that there's with a lot of the deals, of course, with the deals that we approve will have to have a pretty sound exit strategy. And of course, with the exit strategy, there can never be a date at which it happens. But it's really two things. One is that this whole redeployment and repayment of funds, which is something slightly separate to actually the timing of the exit, and that's maybe something we can talk about as well. But there needs to be a solid exit strategy that makes sense. Now, that might be that after year 4, etc., that the company would look at refinancing, for example, that particular project to see if it's feasible for them to replace the EB-5 funds with another source of financing. It could be that if the project is finished, then from that period they would look to see if they can sell that project. So there would have to be an outline of the exit strategy, and that's actually important for us because we want to know that there is some kind of a plausible exit strategy, but there cannot really be an exact date on that. Having said that, I think that what the industry is now focusing on, and perhaps we should have focused on it earlier, is this matter of redeployment. And it's become into focus because, as we know, the retrogression is going to result in Chinese nationals perhaps staying in a specific transaction for longer than it was anticipated. So if we are thinking about 6 to 8 years before really the Chinese nationals can think about exiting, then we have a situation where the whole deal has to be structured in order to at least allow people who don't have to wait for that period of time to exit. So that's when we I think it gets tricky. I actually asked USCIS that question. We need some more guidance from USCIS with regarding to the really clear definition of what at-risk means, and also some guidance. I'm hoping that guidance will come with a collaboration with the SEC as to how, therefore, those funds can be redeployed in order for them for the sponsors to remain compliant with financial regulations, because now we are definitely out of one project and potentially investing in other securities, which would require some kind of a licensed entity, broker-dealer, registered investment advisor to be involved. How could we actually do that, and how could that be structured? And also, what kind of securities can that be invested in? And again, how can it be structured so that it doesn't also violate USCIS's requirements with regarding to the visa? So the exit, I think, is now becoming an area that we actually think of another risk area for us to look at and make sure that we are comfortable with whatever the structure is that is being proposed.
You said it with retrogression, that's the next key battleground of deciding how this is going to be processed with regards to EB-5. And USCIS, unfortunately, that's doesn't provide the clearest guidance yet, really regarding the whole EB-5 process, but in particular this area, it's very murky. An interesting thing I saw about your company is you have an escrow account of your own, which you hold the funds, and then the funds are sent, instead of having the client directly send it to the regional center.
That's right.
That's an interesting process. Is that regular in the industry, or is that something that you've started?
No, we started that. And the reason we started that was first because transferring money from certain countries is not as easy as in the US, where one would provide wire instructions and the entire amount would get sent out. So with a lot of countries, the funds come in dribs and drabs. And so what we wanted to do, because the way we approach the market, we wanted first the investors to accumulate the funds in one place, before they make a decision as to what their investment should be. Because a lot of the times it takes them longer than that particular deal that we're recommending might be available. So there's no point in going through that process and actually applying and subscribing when they're not able to get the funds in time. So what we ask is for the investors to actually fund their investment account first and foremost. And as you said, it is structured very much like the escrow accounts of the deals in that there's an administrator involved, and the bank involved is also knowledgeable about EB-5 matters. And so when the funds have accumulated there, and following that the investor makes the decision which project to invest in, we simply, together with NES, provide instructions for the funds to be wired from that account, from the investor sub-account, and into the deal escrow. So operationally, I guess it functions similar to an attorney's escrow account, where clients' funds are deposited, and from there basically it goes to various.
Are there any escrow fees that are added for holding the funds?
We cover those.
You cover those. One issue that potentially come up is a key part for the immigration attorney is showing source of funds and tracing the funds. If the funds are sent before proper sourcing could happen, that might be a problem. We'll have to send the money back and source it and come back. Do you work with immigration attorneys, or at that point they already have an immigration attorney that's working with them?
We always work. So we really don't work with a client unless they have an immigration attorney. Right. So that's very important. And that's, we want to be regarded as partners with immigration attorneys. So if a client comes to us directly without an attorney, we also do the same thing. We provide them with a list of clients. With a list of attorneys. We look at, for example, the location where the attorney is and perhaps where the client would like to move. Language issues become very important. So we provide them with some recommendations of attorneys that we have worked with and we're comfortable in recommending. And we actually want to then proceed from there together with their immigration attorney that they have chosen. One of the reasons is very much the source of funds. So when we were putting the company together, we were thinking, well, should we do that? Should we also do the source of funds investigations and produce the documentation? We decided not to, because many attorneys have their own preferred methods of doing that. They have their own context, they have their own methodology, they're much more comfortable having that documentation rather than something produced by us. So we decided, therefore, not to get into that part of the transaction. And so but that means that we have to therefore work very, very closely with the attorney, make sure that first, before the funds are transferred, that they are happy with the source of funds documentation, that is all in place, and then it goes through the transfer as if it's going into a deal escrow. It's just that there's no deal as yet, and therefore it would have to it would come to our escrow first, into our investment account, and then would go to deal. But that's an important issue, and yes, we make sure that's done before.
What's a wonderful structure you've designed, the level of service of giving guidance and giving some sort of comfort in the person's investing, where they always seek it from me where I can't give that. And then as well as this structure of having the escrow account, because a lot of countries, they do come in pieces. And
that's right.
Even if they have a regional center picked up, you don't want them to piecemeal send the money in the regional center account.
Right. That's right.
Regional centers aren't communicative sometimes to show that the funds are there or not. So having a third party hold them that's working in the interest of the client is invaluable. Or it's very valuable, yeah. Is that invaluable a correct terminology?
Invaluable is correct.
In America, when you speak someone with a British accent, you always you second guess the way you're speaking because it always sounds so intelligent when you say something. Well, that's it for all the questions I had. Is there anything else that you want to discuss about the program, about what you're doing that you'd like people to hear about?
Well, the only other thing I'd say is this. So this is what we call our private client services. And I think that this is the jewel in the crown, because this is where we really focus on picking the right deals, etc. And again, I want us always to be regarded as the champion of the investors. So we always want to provide that fiduciary role for the investors. So now, recently there's been a little bit more dialogue about what can we provide services to the institutional services, in other words, to perhaps the developer and or the sponsor of the deals. And so in thinking about it, and kind of going back in the financial markets, I think there might be some validity to that. And that would be for us to come in just as it is with ERISA, the Employment Retirement Investment Savings Act, where there's a requirement for an independent fiduciary to be involved on behalf of the beneficiaries. So if, therefore, we can implement some services that we then work with the sponsor, but as the independent fiduciary representing the investors, so that we perhaps help even suggest as to how some of the wording in the documentation, the escrow release, for example, some stuff in the partnership agreements that we think that are not beneficial for investors, that perhaps there is a way that we can actually provide these fiduciary services to the institutions, but yet still act as a fiduciary for the investors. Mm-hmm. So that's something that I think it's exciting, because I think that we'll be able to have a broader impact on the market and be able to, if you like, once we provide our services to a greater number of investors. But it's something that we're working towards and kind of refining the details.
There's one more question that I would have to ask you is there a preference to that loan model for EB-5 or any particular model of how the regional center does the investment?
Oh, absolutely, absolutely. And that goes to the evaluation of risk. So when you're thinking about investment risk, of course, what matters is the priority of the cash flows and priority of repayment should the project be sold, for example. Mm-hmm. So in a situation like that, the equity has the greatest risk because it's at the bottom of the capital stack. So if something goes wrong or if the project has to get sold, everybody else gets paid first, the equity investors get paid last. Mm-hmm. And therefore the risk of loss is greater for equity, and that's typically why the returns expected from equity is higher. When it comes to the debt model, then we have different, we have obviously senior loan with first lien on the property, which is our preference, because that's where, especially if the
How often
loan
do you get that?
Well,
that's a great place to be.
That's why I'm saying that we're looking for that golden needle in the haystack, right? So there aren't many projects like that, although there are some. So, obviously, we have recommendations. So it's a matter of finding those. So first lien, senior note is our preference. And then, of course, we go to the mezzanine. We'd like to see what collateral there is. Some projects actually provide some kind of collateral other than just the equity that the developer or the sponsor has put up. Mm-hmm. And then down the line, basically, to a completely unsecured loan, preferred equity. So all of it comes to understanding the priority of cash flows and return of capital, and as to where the EB-5 investors fall within that capital stack. The higher they are, the more we like the project.
Wonderful. And as an immigration attorney, when a client does choose an investment, it's important that I see the I-526 package that the regional center has prepped so I can review it once. So if a client did choose a regional center, you would contact them and you'd work with the immigration attorney, you get that information so the attorney can review
Absolutely.
it.
Yes.
Okay, that's very key.
Yes.
Very key. Okay.
Yeah. And for example, the deals we've worked with, the attorney acting on behalf of the regional center in the cases that in the projects that we have recommended, they have put the whole I-526 template together, mm-hmm. and basically we provide that to our clients' attorneys to use or not to use, but obviously the preference is that they would use it.
Keep it consistent.
Exactly.
Perfect.
Yes.
Wonderful, Mr. Attari. It was a wonderful interview. I learned a lot. I appreciate it, and hope you have a good time at the conference tomorrow, you said?
It's tomorrow, yes.
How long is it going to be?
It's from 8:30 till 5:30.
And you're speaking the whole time?
Oh, no. I only have one slot.
Good. Your throat would be out. Well, it was a pleasure. I hope you enjoy your time in Los Angeles.
I certainly did. It was very good. Thank you. I enjoyed it.
Thank you very much. To learn more about Mr. Attari and his firm, please visit AISAEB5.com, spelled AISAEB5.com. Thank you for listening. To learn more about this program, please visit www.immigrationlawyerspodcast.com. Also, attorneys can visit www.immigrationlawyerslistserv.com to learn more about special listservs for immigration lawyers that provide forums to discuss professional questions and issues and exchange information with other practitioners from across the globe.